Hi traders, this is Steve Marley, the market chartist for FX Explained, and we're back to the S&P 500 E-mini future. We did feature this earlier in the week in here, but the market pushing up to yet another new recovery high in the past 24 hours, up to 33.47 and a quarter, having closed this bear gap up here at 33.12.28 earlier in the week, and the market now sitting just 1.5–2% below this all-time high at 33.97 and a half. Real risk for a push up to and through there. Remember, we had the US employment report today for July. That's going to be a significant piece of data, not as big as it has been in the past, and I think through the whole pandemic, this data not really driving markets as much as normal, because obviously there's some sketchiness around the data and what it actually means. Nevertheless, in here we'll be focusing on that data and real risk for a new all-time high for the S&P above this 33.97 and a half and psychological 3400 going into the day. And if we get a break up through there, we could see further acceleration to the upside on an intermediate term basis going into the balance of August. So upside pressure is very much intact in here. Just a quick dip into the DAX in here to see the contrast with the European equity indices. Far more negative. We broke below this longer term trend line support. We accelerated lower at the end of last week. We did get a bounce on Monday, but the market unable to build on that bounce. And you compare that to the US equity indices continuing to push to new highs, and the European indices in here unable to do that and rolling back lower. So a more negative theme there, but certainly if we go back to that S&P 500 looking bullish going into today's US employment report. I'm going to wish you all a great trading day. Please do be safe out there. This has been Steve Marley, the market chartist for FX Explained.